Our next guest says there are too many bulls in the market, and he's worried about a melt up. For more on this depressing news, for more on the markets, I want to bring in Ed Yardeni, president of Yardeni Research. Good morning to you.
Good morning.
We had Mr. Lee on earlier, who has some nice optimism to him.
Right.
It sounds like you're happy about where inflation is going.
Absolutely.
But less happy about how the market's taking it.
Well, I would like to see a civilized bull market here. I don't want this thing getting out of hand. And so I am concerned about a melt-up, because melt-ups are usually followed by melt-downs. But the bottom line is we've been in a bull market since October 12th. We're still in a bull market. If we have a pullback, I think the word is pullback rather than correction. I think that will be a healthy development. But I'm still targeting 4,600 by the end of the year or by the end of the week. I haven't quite figured out the timing.
Oh, but let's talk real economy first, and we'll come back to the market.
Absolutely.
So where do you really think we are on inflation? Where do you really think we are on what the Fed may or may not do this summer and come this fall?
Yeah, I think the market is kind of overjoyed with a disinflationary soft landing scenario. That seems to be what we're in. I've been thinking for quite some time that we're in a recession, but I argue that it's a rolling recession, not an economy-wide recession. Now I think we're in a rolling recovery. Housing looks.
Do you think the recession piece is we've passed that?
I think we have, and I think we have had, for those who are waiting for a recession, I think we've had it all along. It's just been hitting different sectors at different times, and there's been strength in other areas. And I think the same thing's happened now. We're probably going to go into recession in the commercial real estate.
So then do you give a standing ovation to Jay Powell?
Well, I do, actually. Usually Wall Street economists and strategists like to be contrary and to say that the Fed is not on the right track, but I think they actually can say mission accomplished. I hope they don't, because that'll be a jinx.
Right.
But look, inflation's down to 3% on a CPI basis on a year-over-year basis. I think that that disinflation is now made in China. The market's down today because of weak China data.
Right.
But a couple of days ago, it was up because of better than expected PPI.
So Jared Bernstein's going to be on. I just thought of a really good thing that he should do. He's going to come on.
Right.
He's going to say, we had nothing to do with inflation being ignited in the first place, but we have everything to do with inflation coming down because we passed the inflation.
Will.
So that we know that. And I was going to say to him, Jared, instead of no one really believes that, so it doesn't help your case. It just sounds like why don't you say the Fed brought down the inflation rate with its increase, but we gave the economy enough positive things that the economy held up in the face of 500.
Absolutely.
So I would sell it that way.
But I would been sell saying it. That.
Yeah.
That's what they've been saying, because they say we can't control the Fed.
They can say that. They can say that, but to find the actual, none of the policies that we've passed have really been implemented yet. And a lot of this is just a recovery after the pandemic. But they're going to take, you read earlier, they're going to take a victory lap on inflation. The Inflation Reduction Act hasn't been put in yet. That's not why inflation is coming down. Inflation is coming down because of the Fed, but we've had good jobs numbers every Friday.
Right.
So if you're going to really sell something that people might not just immediately dismiss as just total BS.
What about all the supply chain stuff? Because that's been actually the biggest piece of it.
Right, but
and you're not
how did we manage? How
did we manage that?
Through that?
Pretty well.
There's always this tendency.
Well, the whole world is.
There's always this tendency
reopened
because of the nature of journalism and financial press to really focus on fiscal and monetary policy and what happens in Washington.
Right.
But I think it's important to realize that a lot of what's happened over the past few years has occurred because something very different has in fact occurred, and that is the pandemic. And the pandemic had shock waves that caused inflation. They caused the supply chain disruptions.
So did the war in Ukraine, and today the deal to allow the Ukrainian wheat to come back.
That could be troublesome.
So what is it?
That could be troublesome on the inflation.
Well, who managed the supply chain? The government managed it, or the private sector worked its way around the supply chain issue?
I think that what happened is the response of the government to the pandemic was to overstimulate the economy.
Right, that's what caused the inflation. Larry Summers even said that.
Too many relief checks and too much.
But do you think they managed? No, but to the point of the supply chain, do you give them credit for what they did at the ports? Do you give them credit or not? Did they make mistakes there? Was that the?
Yeah, I'm not into blaming folks. My kind of objective analysis of what happened is that the stimulus from all these checks created a buying binge. We all got cabin fever from being at home for a couple of months. And when we started
Months?
for a couple of months.
Years.
Well, the lockdowns.
No, I know, but in general, it was a lot longer.
But we had a buying binge, and we couldn't buy services, so we bought goods, and that's really what caused the ports to clog up. Retailers got fooled, and they ordered way too much, and by the time it got through the ports, consumers already passed on and said, no mas, and they pivoted.
But are you ready to keep asking the same question? How did the supply chain, how was that solved, and how was it reopened? Did the government?
Because the consumer... I don't like to give the government a lot of credit.
Well, I don't either.
For things, but I think in this case, we had a buying binge for goods. It got satisfied, and then suddenly the demand for goods was such that inventories piled up, and we had the disinflation in the goods market. So I would argue that inflation has actually been, ironically, much more transitory than persistent.
Let me ask you one last question with this 4,600 target of yours. How much of that is going to be a function of tech and otherwise the NASDAQ going up versus the rest of the market, given the heavy weighted element that is tech in all of this?
Yeah, I think Mike Santoli got it right, is that the market is broadening out. Look, beyond 4,600, I'm looking for 4,800 to 5,400 over the next 18 months. I think that's going to be because there is no recession, because earnings are going to be picking up, and I think because the market will, in fact, broaden out.